Welcome back to It's Only Money here on your radio. I am Ryan, and I'm here with financial advisors from Edgewater Family Wealth. Scott, Brown, and Tammy are here. EdgewaterFamilyWealth.com is, of course, the website for all info on how to get a hold of these gentlemen, and also links to past shows, financial talks, all kinds of stuff. That's the number one website to go to. And good morning, fellas. How are we doing?
Good morning.
Fantastic.
It is so good to see you on a beautiful, beautiful day. And I know the financial world's always moving. It's always shaking. Just before we get started, is every day kind of a different day for you guys? Or is there a version of what you do business as usual?
Everything's different, and that is business as usual. I tell people who get into this business, young people who are I'm like, the one thing about this business is that every morning when you get up, you're starting all over again.
Always something else.
Doesn't matter what happened yesterday. Client could have had a great day, made a lot of money, but what you do for me this morning? What's happening in the markets? What's Powell doing? What's the president doing? Who's the president? Which team is in power? The blue one or the red one? And it's just everything's different. But I'm introducing an idea here. I want to get your opinion on a new segment for our show. I was thinking about this on the way in because this happened to me. Is the new segment is called What I Saw. And it's only going to just take a second, but I saw this today and I couldn't process it. So
what is it?
I'd gone to pick up my truck from the dealership and I was getting on the interstate and on the on-ramp. Now this is a, high speed 60, 70 mile an hour thing. And there's a guy and he seems to be reasonably dressed. He's got, the earbuds in his ears. So he's clearly having a business conversation. He's literally sitting on the edge of the embankment, the wall separating the on-ramp from the city. He's I'm going to say 3/4 of the way up the ramp, almost onto the interstate. He's sitting there in slacks, having a conversation on a phone, no car. No, he's clearly just having a business conversation on the on-ramp to Interstate 4.
There's no car.
There's no car.
Wait.
He's got a briefcase. He's literally seems to be conducting a conference call.
This feels like a riddle.
I don't. What did I just see? What is that?
I've said this a bunch, which is the AirPods make it so you can't tell who's crazy anymore.
Right.
Because he could be on a business call or he could have found some AirPods somewhere and he just gets to now talk out loud. Everybody assumes that he's having some kind of business conversation. But no business deal has ever been made on the on-ramp to I-4 when you have no car right there.
I like it. What does he do? He was dressed nice.
Maybe someone just stole his car. Maybe he was just carjacked.
I don't know.
In that spot, on that ramp. Yeah.
But he looked very relaxed. He looked like he was literally trading options or something. He was conducting a real estate deal of some kind, and this is the place he chose to do it.
His insurance must be
You're
very
thinking
good.
I'm wrong about that? It's one of those things where you pass it, and then you do a double take, and you're like, what did I just see?
Everybody's got their safe space, Scott.
Okay. I just want you to know, people, you can do business just about anywhere. Anyway, we should probably get to the numbers.
Oh, yeah, we have it back.
We got the music back. Computer works this week.
Yeah, last time it wasn't working, so I'm quite happy now.
He was all discombobulated last time.
The entire week.
They upgraded the system here at iHeart, and there's been a few kinks here and there, but I'm just glad we're not operating off of Windows 95 anymore.
Nice.
We've moved to Windows 98.
Nice.
Much better now.
Big update.
Yeah.
Speaking of update, we spoke last week on how the federal fund raised its rate to about 5%, the actual yield. However, how do you think the actual yield, the market capital yield, did since the past week?
The what?
The yield, actually, the treasuries.
Treasury yields?
Yes. How do you think they did after the federal fund went up 25 basis points?
Well, because the way you're saying it, I'm going to guess that they went the opposite direction on the thing.
I have to masquerade.
Yeah, you're not good at the poker thing.
I'm trying to. Yeah, I'm learning.
I don't have 4 aces.
Shouted that loudly as he was very shaky.
Yeah. So anyway, rates went down?
They did went down. And now that's a good hint that the market is no longer fighting the Fed.
Okay.
And do we know what fighting the Fed is?
Yeah, they get together once a year
With a
in an
shield.
underground basement, and much like Fight Club.
Club.
Yeah,
But first rule of fighting the Fed.
you don't
Don't
talk about fighting the Fed. No.
Exactly. But apparently now we know about it,
Yeah.
and we have to let everybody knows about it. We
Yes.
don't want to.
So what did the rate drop from to?
So before that, the rate exceeded 5% for the 1 year, but then it dropped sharply to 3.8, and then readjusted to about 4.
Well, some of that was correct me if I'm wrong, but some of that was a byproduct of the banking issues we had over the last couple of weeks, and people thinking, well, the Fed's going to slow down. And frankly, I'm in favor of what they did. I think to slow down because of a blip in one bank or two banks, which appears to have been isolated, and in fact, SVB was bought by another bank, so they've successfully landed that plane. I think a lot of people, and I think that they shouldn't have continued to raise. I believe they should continue to be aggressive to get a handle on inflation so that we can move forward, take our medicine and move forward. So I think what they did, A, was the right thing, and B, flew in the face of what a lot of people wanted, the market in particular. So, in this case, the market tail is not wagging the Fed dog. And I think that's the correct thing to do long term.
Agreed. Yeah. And to the point about the banking system, actually, we had, as you said, there was a quick intervention. And within that weekend, before the market
don't say intervention, it makes Ryan nervous.
Yeah, my family here. No, all right, good.
Is this a party?
Yeah, no, I've never had a surprise party in my life, and if you threw one for me, I wouldn't think fun birthday. I'd think it's an intervention.
party.
Anyway, sorry. Go on.
So, and mostly fighting the Fed here, since we're talking about it, it sometimes is presented as a contrarian theory to what the Fed does. Some people might think, oh, I'm going to do exactly the opposite, and I'm being smart.
Yeah.
Which doesn't usually end well for many people.
Yeah, well, first, if you say to yourself, I'm being smart, that's probably not a good sign, right? If you have to tell yourself, wait, I think this time I'm being smart,
it's like people, the only people who say I'm not drunk are people who are actively drinking.
Yes.
You know what I mean?
Yes. Thou does protest us too much.
I know smart people, they never bring up how smart they are.
I've had that exact conversation. Yes.
Agreed. Yeah, we see that quite often in our industry too.
Yeah.
When we see, for example, that the Fed is cutting rates, you'd know that they're trying to stimulate the economy. Therefore, you go ahead and become a little bit more aggressive. So you start targeting small cap, aggressive stuff that you think might grow a lot.
Because of the reduced cost of capital.
Mainly, yes, because of that, and vice versa.
Sure.
So that said, whether expansion or contraction, the economy goes, any investment we do, it has to be vetted for like such factors as free cash flow, healthy balance sheet, or so.
No, that's not how you do it. How do you do it, Ryan?
You wait till someone on the internet makes a funny meme about it, and then you buy whatever the funniest meme is.
Yes, you buy the funny meme stock. You don't.
Wait, you guys are doing research,
balance sheets, prices to earnings. That's just silly.
What do animals have to do with anything?
Yes,
that was
different kind of vet. Sorry,
that was the third item on my list. Actually, I was saying cash flow, healthy balance sheet, and somebody on the internet.
And a funny meme.
Yes.
Funny meme.
Yes. Okay. All right.
So where we stand right now, I think the next Fed meeting is in May, May 3rd, which is more than a month from now. And they probably are going to listen to what you just said and continue their policy unless one of...
They should listen to me, I think.
That's what I said, So unless one of three things kind of change from the pattern that we saw the past 6 months.
Okay.
And those are either jobs, PCIe, or CPI. So inflation or jobs.
So if inflation, there's a print in inflation that looks like it's being squashed a little bit. I still think 2% is not happening, but 3 or 4 is certainly a possibility. So if they see a 3.8 or a 4.1, or they're going to, all right, maybe we can take our foot off the brake a little bit, and that will excite the markets. So I'm of the opinion that if the Fed does show signs that they're going to back off in terms of tightening, I think the market, both stock and bond, will have a glorious few weeks.
And that's one of the unique times in history when you see both of them moving the same
It
direction.
will be weird,
Yeah.
but it will be very welcome, I will tell you. So, yeah, I think that's a strong possibility. I don't know if we're there. In the labor markets, really, continues to be the one they can't quite figure out because they're the cost of, especially in the service industry. I think I told this story before, but, I was in Colorado a few months ago, and the starting wage for someone bagging groceries was $21 an hour.
Incredible.
And I remember as a young man bagging groceries at Publix 100 years ago, and my starting salary was, or my starting hourly wage was $3.45.
Whoa.
So
wow,
that's a little bit of inflation.
Times there.
Yeah. So how do we get a handle if at the lower end, I guess entry level jobs, for lack of a better way to describe it, if we have such cost inflation to companies, in this case, it was a grocery store, which of course is going to raise their prices to offset that. I don't know what we do about that. That's something kind of new that we're dealing with and trying to figure out. We are seeing layoffs at the upper end of the wage scale. I imagine that will trickle down at some point, but we can finish this conversation when we come back from break.
All right, we'll be right back with more It's Only Money. Welcome back to It's Only Money, and we are in segment 2 with Scott Brown and Tammy from Edgewater Family Wealth, and I hope you're enjoying your day out there. If you want to get a hold of these gentlemen, Edgewater Family Wealth, just go to the website. It's easy to find. It's just edgewaterfamilywealth.com. And from last segment, we were doing a little bit of numbers, talking a little inflation, talking the yield and the underground fight club that is the Fed that we don't talk about. But back to those numbers, baby.
I get it a second time.
That's unprecedented.
I'm making up for last week. Yeah.
Speaking of inflation, I read recently that you want to guess at what the average kid gets for a tooth now?
Tooth fairy?
Yeah. What's the tooth fairy doing?
No, just a guy that comes and steals teeth.
No, of course it's the tooth fairy. Yeah. Ryan can hear you.
So, you guys don't realize how much money is in kids' teeth.
Yes. So give it a guess.
How much was it before?
I mean, I don't know.
$5,
it was like a quarter when I was a kid.
Yeah, I never got money. I would get little trinkets and toys.
That's a weird tooth fairy.
That's like $10.
We were poor, Scott.
It's not $10. Not quite $10.
I'd say it's got 7. Let's go 7.
You're very close. It's like $6.83 nationwide.
Wow.
Yeah. So in Manhattan they're getting $20. And,
of course.
Some other place they're getting $3, but it's $6. What? $6 and almost $7?
Wow.
For a tooth?
That kid will be very happy.
Yeah.
I don't try to lose all the teeth in one day.
I don't have children, so take anything I say with a grain of salt. But it feels like teaching children that you're going to remove a part of their body, place it under a pillow, and a magic fairy is going to come and steal them. Seems like a weird idea.
Well, and that, next thing you know, they're putting a kidney under there or something. See what happens. What will I get for this?
Yeah, next thing they're hacking off parts of their little brother just to see what they can get. I got a grilled cheese sandwich for a toe. It was crazy.
Yeah. So inflation, it remains a thing.
Oh yeah.
It's funny because we get in that we're gonna touch on an area here that's quite scary, but we'll get in the pool with the sharks just for a minute. Is politics plays a role, people say, and probably fair to say that politics plays a role in lots of things. These are political appointees and administrations, certainly, no matter which team they're on, red or blue.
Well, that's what I've learned in doing radio. We have multiple different kinds of stations here, right? Like we got some that lean left, some lean right, and
none that lean down the middle.
I would like to say we're
that's us.
Down the middle.
We're the middle people.
But the thing about it is the amount of people on both sides that feel like whoever is in charge of the entire country, that person directly affecting their life on a daily basis, is high.
Yes.
And I don't see it in my own personal life.
No.
But I'm not a titan of industry. I'm not, I got a tiny kettle corn stand and I work for a business that is governed by the FCC, but it doesn't seem like really that it affects my daily life.
Who the president is.
Are
you sure?
It feels that way.
Nah, I don't know.
Am I wrong?
I feel like the president, I'm not, I feel like he may be oppressing you. You in particular, Ryan Holmes.
The worst that happens is I'm slightly annoyed sometimes.
Yeah, well, I mean, that gets in your way, right? There's whoever's up in the White House. I'm sure they're going through a list of people they want to annoy that day, and you're probably on it.
Yep.
Yeah, I find politics an annoyance for the most part. I guess I don't understand political guy. I don't understand angry political guy, because all you're doing is complaining. If you are all you're trying to be is self-righteous. If you call me up and say, so-and-so is awful, and this party is awful, and that party is awful, and it's the end of the world, and they're going to ruin. Okay, I get it. I'm not saying you're wrong, but what are you doing about it? Because all you're doing is boring me over breakfast, right? I mean, if you're not running for office, what is it you're doing? If you're angry political guy, right? And I say guy, it's usually a dude. Occasionally I run into angry political gal.
Yeah.
But more often than not, it's angry political guy. An angry political guy just, wants to tell you that the world is going to heck in a handbasket, and it's because of the person in the White House or in the Senate or in Congress somewhere, or local. They never talk about local government, which is hilarious because that's probably where they're most affected. But what I would say is, look, if I get it, it's every once in a while I catch myself, talking politics, which I should learn my lesson because I'm a solution guy. Like if you have a solution and you say, hey, this thing is a problem, immigration's a problem, or the debt ceiling is a problem, or debt itself is a problem. Okay, well, we kind of all get those things are problems and issues, and they have nuances. But if you're just blaming someone without providing a solution, you're just a complainer, right?
It's easier, right?
You're scapegoating.
Yeah.
So I challenged someone recently. I said, look, if you believe that this person or this party or that party has such an effect on your life, here's my challenge for you. After the next election, I want you to write down your income, write down your tax bracket, write down what you paid in taxes, write down your property taxes, write down the value of your home. And then after 4 years, I want you to tell me how significantly those things changed. And I got news for you. Not much. Not much. And that goes for both parties, right? If you elect the blue person because you think the blue person is going to make your life significantly better, it will do the math, right? Or if you elect the red person because you think the red team is going to make your life better, I'm open to the math, right? But nobody's going to do that, right? They're not going to sit down and say, well, when so-and-so got elected, I made $74,822 and I paid, $7,000 in taxes, and my property taxes were $1,850. And now, well, they're virtually the same, right? And that some of that's affected on a local level, not the national level.
Yeah, mostly, yeah.
Right? Like property taxes and things like that. But people don't do that. They just say, that guy's horrible.
Yeah.
Or that gal's horrible. Or if you like that person, then you're dumb. Right? That's the conversation you're having, right? So all I'm saying to you is if you're a political guy and you're listening to me right now, or political gal, I challenge you, write all these things down before the next election on January 1, before that person gets inaugurated, right? And write all these details down, and then come see me in 4 years. I'll be all ears.
But to that, I would say learning what I've learned on this show is that the economy in general has consistently always gone up, right? Like, so no matter who it is, by the end of year 4, generally, unless you hit it like a random depression or whatever, it's going to be better no matter what.
Yeah, well, first of all, depressions and recessions, depressions are an anomaly, hopefully, but recessions are part of the game, right? Yeah. People.
I wish we'd call them panics again. I like learning about them in history, and they called them like the Panic of 1812, and I was like, that sounds cooler.
Yeah, I like panic. It sells more papers, that's for sure.
Yeah.
But the reality is, we have recessions every 3, 4, 5 years. Recessions just 2 quarters of negative GDP, and they happen to every administration. There's almost no administration historically that hasn't gone through some type of recession, whether it's event-driven, 9/11, COVID, whatever it is, right? So you can say, well, this is why it happened, but it still happened, right? And that whatever team was in power. So I am fond of saying that economies happen to presidents, not because of them. And in fact, I would argue that whatever a president does, and I'm not saying they don't have any effect, especially on the psyche of a country, but whatever effect that president has had will probably show up in the next administration.
Usually, yeah.
Right, because whatever policies Biden is or is not doing, or Trump did or did not do, typically are not really grabbing hold. And like this infrastructure bill for Biden, the most of that nothing's happened yet. And whoever, whether it's Biden or Trump or DeSantis or somebody maybe else that I would like better, maybe Ryan will be president. It will happen to President Ryan, right? It's whatever's going on today. It's so silly to think that a population of 350 million people with a GDP of $20+ trillion a year, like somebody takes office on Tuesday and Wednesday, they can mess the whole thing up, right? That's just silliness. So, and again, I'm not saying for those of you who are right now angrily clutching your radio that it doesn't have an effect. I do think presidents they're like a coach, right? They kind of affect the psyche. So if you feel like a president comes in and that president is real businessy and pro-business and a capitalist and rah capitalism and all that sort of thing, maybe as a business owner you're inspired, maybe you feel like you'll take more risk, I get that, right? If someone comes in and they're less of those things and they don't have a background in business and maybe they're more social safety net oriented, and you think, well, then that's going to be more regulation, and I feel now I'm withdrawing a little bit. So I get it. I'm not saying these things don't have an effect, but they do not have the direct effect people say they do, right? And I've, whether you're a red team or blue team person, I've been hearing the same complaints my entire life about these teams, right? So when one of them gets power, the other one says, "That's it, Ryan, it's over.
Yeah,
it's all going to hell in a handbasket." And then the other one takes power, and the other side says, "That's it, it's all going to hell." And it's like, listen, man, drink your Coke and be quiet.
That's a great. I want to put that on a T-shirt for Edgewater Family Wealth. Edgewater Family Wealth. Drink a Coke and be cool, man.
Drink Coke and calm down.
Man, if you want more great advice like that, though, EdgewaterFamilyWealth.com is where you go to get a hold of these gentlemen, and you get links to past episodes and all the blogs and things they got going on there. Check it out. It's a lot of fun, and it's easy to get to. Again, that website, EdgewaterFamilyWealth.com, and we'll be right back with more It's Only Money. Welcome back to It's Only Money. I'm here with financial advisors from Edgewater Family Wealth, Scott, Brown, and Tammy. And you're probably out there maybe driving in your car right now on one of the nation's finest interstate systems. That was an investment done by a president, put in. And that took, Tammy was telling me, how long did that take before that paid off?
30+ years.
30 years.
Yeah.
Yeah. So Eisenhower said, hey, we need an interstate system. We need a means to transport goods and people and things of that nature. And to our, where we left off was talking about how long, an administration has to see the effect of policy, right? And now policy's like moves at a glacial pace. Because everybody's arguing and pointing fingers at each other rather than doing the country's business. But in this case, people get impatient, right? They say, well, I want to see change tomorrow. Well, it's not going to happen that way. Eisenhower said we needed interstate. 35 years later, it was done, right? So that didn't happen overnight. It's not like a president takes office and says, waves a magic wand and all the interstates are fixed and the debt goes away. And, you got all kinds of lobbying and special interests, and you got a lot of people to make happy just to stay in power, let alone do anything, right? These days.
And there were a couple of recessions during the construction project.
The 70s were no fun. There were, gas lines and Vietnam. And it was not, it's not all peaches and cream, even if the person you want to get elected gets elected. It's people just overstate, again, the effect a president can have on the economy. I would argue that it's more on the psyche of a country, the effect a president has, how they lead. Reagan was my first vote. I'll admit to that right now. When I was a young man, I wanted to be, a rock star investment guy, and Reagan was talking my talk, and I thought, hey, man, I'm going to vote for Reagan. That was my first vote.
Right.
And he was a guy who it's arguable what because he ran up the debt a little bit, which people don't talk about. But by and large, he was pro-business and he was rah, go America, which is all cool. I thought he was my guy. And I think he appealed to a lot of people because he was a good dude, well-intended. You might not have agreed with some of his more conservative stances. If you were on the hippie side, a little bit, you probably weren't digging everything.
Mm-hmm.
But we seem to be lacking that figure that can coach us as a country. I think Reagan was a good coach. You could argue with his policies. You could argue with some of the things he did or did not do or did not accomplish.
And you can never get 100% consensus.
Yeah, but I think most Americans at that time, now I was young and dumb, so I don't remember exactly, but I felt like he appealed to a lot of people as a coach. He kind of set a good tone. So my argument is not so much that presidents don't have an effect, but I think largely their effect is it's like a coach, a good basketball or football coach, right? They're not playing. They're not going to throw a ball. They're not going to catch a ball. They're not going to block. They're not going to do any of that stuff, but they set the tone. They set the tone in the locker room. They try to bring unity to the locker room. They want everybody on the same page. They don't want the star taking all the shots because that depresses the rest of the team, right? So they're trying to find a way to motivate a large group of people, in this case 350 million people who live in very different places with very different beliefs and very, very different cultures, and it's hard. It's hard to do. The bigger the group, the harder it is, right? So, I don't envy a president of any kind. I think it's an immensely unforgiving job. We see what presidents look like when they come in and when they go out. They look very different.
Yeah, they do.
It's like, holy mackerel, what happened to that guy? Oh, he was the president. Yeah. So, I get it, but I do get frustrated with people who overemphasize a president's influence on their day-to-day life and certainly on their economics.
That's interesting because I feel still like not a lot of effect, but I would like a coach. You know what I mean? Like I would like a guy that's like, hey, we know what we're doing. Let's go. And hey, America out there, you're doing a good job.
Yeah. Way to go, America.
It's got to be a hard job to be a coach. Even like a football team. I always think this where I'm like, you're telling millionaires what to do that all think that they're the best. And it is like setting a tone. Like, so you just got to hope that like you pick the right people in the right position and they get the job done correctly. And that's all you can do.
That's all you can do. You can only do so much. I mean, in clients oftentimes, I think they rely on us to be their coach. It's not to say they don't question the play calling sometimes. They do, I promise you.
Yeah.
But the reality is, at the end of the day, it's about trust. And I think that's what we're lacking right now in this country is trust of our leadership. And it's on both sides. Like, half of the country doesn't trust one leader and half of the country doesn't trust the other leader, and that we're putting forth to quote unquote lead us. So I think it's problematic.
Well, speaking of trust, I mean, like we had a big kind of a bank run from SVC or SVB. I'm not going to get that wrong. I'm horrible with letters.
There's only 26 of them.
Yeah, there's only 26, and I never get them in the right order. But there was like a bank run for that, and they were worried that like that was going to cause like a chain reaction where like people would just start pulling out cashes out of their their local Fairwinds here,
right? Because
this one bank in Silicon Valley that does a very specific kind of investing and lending.
Yep.
But that didn't seem to happen. From what I know, there was another one like Credit Suisse and another, but it seems like overall, no one went running to their banks because they had trust in the system.
Yeah, I think that's fair. I think that the Fed came out pretty quickly, or Yellen came out pretty quickly from the Treasury and said, we're going to backstop this thing. And that's a conversation we could have for hours about whether that's a good thing or not. But yeah, they got on top of it quick. They realized it was somewhat isolated because of the type of bank it was and the depositors they had. And you have to remember, for those who don't remember, is that what happened there is they had a concentration of wealth that most banks don't have. So they have, obviously, it's Silicon Valley, there's a lot of private equity, a lot of venture capital, right? So you had people, the average depositor there, and I'm making the math up, but let's call it 20, 30, 40, $50 million, right? You go down to your local branch here in Orlando, the average depositor has, $3,000, right? So a run on the bank there, and they had 70 depositors who had 40, 50, 60 million dollars that wanted a bunch of it all at once because their other capital sources were drying up and they were rightfully asking for their own money. What happened was that this bank, like a lot of banks, owned treasuries. Mm-hmm. The maturities weren't there yet. They hadn't matured. So the mark to market, or the pricing on those treasuries, despite the fact that they were the safest thing you could buy, was depressed. So then they had to sell a bunch of treasuries at a depressed price. That hurt their capitalization. That's where the regulators got involved. So it was a kind of a perfect storm for that bank, and not in a good way. But it was an isolated case. Credit Suisse is a whole nother thing. There's a lot of mismanagement in that situation. But again, I think it's been handled pretty well.
So for like the regular person, there's cash available.
Mm-hmm.
Then you can just go and get it, and I should not be worried about like going to my bank and not be able to just pull out some cash.
No, I don't think you should worry about that at all. You can worry about it if you want, but I would suggest you're wasting your time. I think most banks are doing a great job of capitalization. They're well run, they're well regulated, and people say, well, regulation's bad. It's not always bad. Sometimes, you're sticking your hard-earned money someplace, you might want somebody looking over the bank's shoulder, right? Just a little bit. I'm not saying over-regulate, but certainly banking institutions, they're very profitable. They have a pretty steady revenue stream at their disposal because they loan money at 7 and pay us 4, and they get the difference, right? So it's a pretty reliable income stream on average, and they should be regulated to some degree. But I think the reality is, most of the banks are solvent. Most of the banks are in good shape, and the Fed or the Treasury Department does backstop you at $250,000, which is then that begs the question: well, why did they backstop people with millions of dollars, right? If we've all agreed the game is played like this, you put money in, and the federal government will insure you up to $250,000, and then suddenly a bank becomes insolvent, and somebody with $50 million gets backstopped. Well, that wasn't the rule, right? So then that creates a whole nother economic conversation as to why did we do that? And is that a good thing? And the answer is, I'm not sure.
Well, whatever we did seemed to have stopped the bleeding in that one area. So maybe not a bad thing in this, but people look at it and go like, we can do that again.
Exactly. That's called moral hazard. That's when you hear the term moral hazard, that's what it is, because what you're teaching people.
He was chasing the Duke boys.
Exactly. Yes, and the General Lee. But what it teaches people theoretically in economic theory is that you don't have to do your due diligence when you put your money in the bank, and that the bank doesn't have to behave, because if they do well, then they're going to be profitable. If they don't do well, the government's just going to come in and bail everybody out, right? So that's arguably not a good thing. But then the other side of the conversation is, well, yes, these private equity firms and these venture capital firms have employees. And if you don't give them their money, these employees won't get their paychecks, right? So there's always this, and this comes back to politics. There's nuance to every conversation. There's nuance that never gets discussed in a 30-second soundbite on television. Whether it's red network or a blue network, they got 30 seconds to make a point, and nuance like I just gave you, you're never going to hear.
Nope, and we only have 10 seconds before we got to go to break, so you're not going to get it now either. Listener. No, please check out edgewaterfamilywealth.com. That is the website if you want to talk to Scott or Tammy, and we'll be right back with more It's Only Money. Welcome back to It's Only Money with financial advisors Scott Brown and Tammy of Edgewater Family Wealth. Edgewater Family Wealth, of course, is the website. Go there. You'll get all the contact info, links to past shows, financial talks with Tammy, and other blogs as well. It's a one-stop shop for somebody who wants to change their financial life. And Scott,
yes,
I got hard-hitting questions for you this week for the final segment, because I was perusing through various, stock forums, with financial forums, and I decided, you know what, let's skip the memes this time. Let's dive in. And a person was talking about something that I honestly did not know existed. because I have a regular savings account.
Yes.
My regular savings account gives me laughable amount of pennies every month.
Right.
I look at it and I laugh at the pennies.
Is that the purpose of it? To make you laugh?
Yeah. I'm like, why even bother giving me these pennies? But they do, and they do it every month. That there is something I did not know existed, and that was a high yield savings account. And that was, they were talking, they were getting like, 4%, 4.7
Sure.
on this. And I was like, oh, well, that seems like a good way to go if I completely know nothing about the market, as we have all learned that I don't.
Right.
Is it a good plan for me to just get a high yield savings account and just sit in that and kick back my shoes and call it a day?
What do you think the answer is?
It's going to be, it depends.
It's
it?
a depends.
He knows it now.
He knows it is. So, yes and no. Maybe, possibly. Those are all the answers. So, you're welcome. So, you come here for the hard answers, don't you? So, listen, this kind of feeds into my general theme, which is there's no right or wrong, right? People get, like anything in life, people want definitive answers. Good or bad? Well, no, that's not the answer. The answer is what works for you. And so if you said to me, hey, Scott, look, I'm a young guy, which you are. I'm a responsible guy, which you are. I'm just going to save and get rich slowly, like is the tried and true method. And you say, well, I did the math. If I save X amount of dollars a year and I earn 4.5% a year, I don't really like risk that much. I don't like volatility. When I see red on my statement, it makes me upset. It affects my quality of life. I'd rather just slow and steady wins the race. And if 4.5% based on the math you've done with you by yourself or with your financial advisor works, then do it all day long. Why wouldn't you, right? Why wouldn't you do the safest thing to the success that you claim you want to have, right? Why? Because people say, well, I'm going to do this really sexy thing, really. And they're saying that not because they think it'll work, although they may think that, but because they want to talk about it. They want to brag about it. They want to go to a cocktail party and say, I bought this and it did that, right? Without telling you about the 10 other things they did that fell completely apart. So don't get caught up in right and wrong. These savings accounts that you're referring to, I mean, they're pretty common. Now, at this point, an average mutual fund money market's probably around 4. The average CD, I just heard of a 1-year CD that was around 5. Mm-hmm. So if these returns work for you, we couldn't have had this conversation a year ago. If you just said, what's a 1-year CD paying? I'd be like pennies. So it wasn't even an option. Well, it's an option now, right? For somebody, say, on a fixed income who needs to earn 5% on their $100,000, which is $5,000, and they say, oh, that will enhance my income, right? That I can make an extra, I don't know, $400 a month, and I could go to dinner one. So these are real. But again, understand what you're trying to accomplish. If you're on a fixed income and you have $100,000 and you say, well, I used to get 1%, that was only $1,000, but now I get 5%, and that's $5,000. And by golly, the wife and I can go to dinner 2 or 3 more times a month. That was a thoughtful conversation, right? If you say, but now we really need to earn 7 or 8, and the only way, in my mind anyway, to earn 7 or 8 is to be in the long-term capital markets like the stock market, then that's the decision you make because you have to take that risk. So speaking to the core of these savings accounts is there are a few of them out there, and I can't think of the names right now, that offer, pretty high rates, 4.5, 4 3/4, 5, whatever it is. And the reason for that is a lot of them are on the online variety, right? They don't have bricks and mortar. They don't have tellers. They don't have ATMs. They have online. And it's generally pretty easy to use, but because they have lower costs, they can provide a higher return. A lot of times these accounts are loss leaders for companies. Let's say your XYZ brokerage firm says, we'll pay you 4.5 or 4 3/4 completely liquid. And you think, well, how can they do that? Because they know that once they lure the money in the door, they can put you in other things. No, you don't have to fall for those other things. You just do what you're doing, right? If you go to your local bank, the rates are going to be a little lower because, Joe or Mary meet you at the door and they got to be paid and they're nice and you get a lollipop and you get to use their pen and
yes, the pen.
You sit in the chair and read the magazine from 7 years ago, and that's all, that's what you get.
Yeah. I love that banks, by the way, all the lollipops are literally called dum-dums. And they give you a dum-dum.
Well, there's a lot of reasons for that. Yeah. But yeah, these savings accounts are legit. Remember that short-term rates, which is basically a money market or savings accounts or like a 1-year CD or whatever, they're really dependent on the treasuries, right? Whatever Tammy comes on with the numbers and he tells you what the 10 years paying or the 1 year's paying or the 2 years paying. Well, that's largely what they're doing with a bunch of this money, going back to the SVB situation. So whatever you see in treasury rates, the average person doesn't pay attention to treasury rates. But I'm telling you, if you want to take a step up in your knowledge and your education, pay attention to treasury rates. Look at that page in the newspaper on the Wall Street Journal, or if you're watching CNBC or Fox Business or whatever your flavor is, pay attention to those things. Those will kind of tell you where the trend is in short-term rates, which is essentially trickles down to money markets and savings.
All right. A classic but accurate it depends answer from Scott.
You're welcome.
Very well thought out, though. It's good. Now, I had somebody ask me this the other day, and they're like, well, I hear you work with Scott. It seems like he's a good guy. I've checked in Edgewater Family Wealth. They got a good reputation. Their question was more, if they work with you, how do they track the progress of their investments and their financial plan? And do you provide tools to clients so they can monitor how things are going? Or is it just that once a year conversation where they sit in your office?
Track the progress, Tammy. We should do that.
I have to write it down.
Track progress. Doggone it.
Out of all the things.
I knew I was forgetting something.
Yeah, but I mean, is it something that they can access? Is it
Sure. Yeah, like any modern day brokerage firm, it's not get your tattered paper statement every month. It's daily 20-minute update kind of stuff. Like most websites that brokerage firms use, you're able to see your balances updated almost by the minute, and you'll have access to the planning. Our website has all kinds of features. So if we've sat down with you and done, written down your goals, we've processed the Monte Carlo simulation, we've done the statistical analysis, we've built you a portfolio. You can go online and look at the planning. You can say, I remember I told Scott that I had X in my 401k, but actually it's Y. You can literally go on and change it if you want, or call us and see that it was changed, right? So that you can have an accurate balance sheet. So a lot of our clients, if not all of our clients, have a balance sheet with us. So they can literally pull up their balance sheet that shows their cars and their houses and their income and their debts and on the credit card and what they owe on their house. And these things are all available online. It's called aggregation software, which is a blessing and a pain sometimes because you have to update passwords and whatnot. But in this day and age, a client can literally go online, see up to minute progress in their net worth, and I mean in all categories.
Wow, that is really interesting because it's funny, like the mental picture I've had of like what you do, because you do take it to a personal level. You've told me about how being a financial advisor is a bit like being a financial therapist in a way, and you always talk about like you at least do like a phone call or an in-person meeting like once a year.
Yep.
And on I think for the first 2 months I was doing this show, I was like, that's all he does. He just comes in and he's like the guru and he sits you down.
Yeah.
And he's like, you're gonna be okay.
There's herbs and candles involved, a sense of some kind. Yes.
So when somebody asked me that, I was like, yeah, I'm sure they got it on their website. And then I was like, oh yeah.
Wonder if they have a website.
What do they do? I've been to edgewaterfamilywealth.com, and that's so interesting. Because I know myself, and I'd want to look at that at all times to know exactly how rich I am.
Yeah, it is a curse and a blessing. I mean, it's good to have that access, but for certain personality types, it can be self-defeating because if they see the day-to-day gyrations and they see a bad gyration, meaning down, they tend to panic. So a lot of, historically, going back to early in my career when people would get their statement like once a quarter, it was once a quarter they were upset. Now it's minute by minute, right? So, in those bad years, which feel like every year to clients, it's funny that I've been having this conversation a lot with clients early this quarter where they'd say, another bad year. Because we're off to a bit of a slow start at this point. And I said, what are you talking about? You've been with me for 30 years. You've had 5 negative years in 30 years. So every 6 years you have a bad year. They feel like it's the opposite, though. They think it's the good year is the odd thing and the bad year is the thing that happens every year. But yeah, I think that the problem is that people have access to information, albeit helpful when they're trying to determine if they're on pace, but it can also get in their way.
Well, if you want to check your financial life every 30 seconds, you can do it with Edgewater Family Wealth.
No, you can't.
But if you want to work with these gentlemen, Scott and Tammy are available. All you have to do is go to the website, edgewaterfamilywealth.com. It is that easy. Why not take your financial future into your own hands and really start doing some real stuff with your money instead of letting it sit there in a low yield savings account like I do. I'm mostly talking to myself now at this point, but edgewaterfamilywealth.com. That's where you want to go. Scott, Tammy, it was a lovely show, and I'll see y'all next week.
Happy weekend. Yeah, and clearly people are rich, right? Or wealthy. You don't have to be rich. I like the term wealthy better. I mean, to rich reminds me of like the Monopoly guy or something. But, you know, there are people, there are regular people.
Now that guy I trust. You
Yeah,
see the problem, Scott? You don't have a monocle.
Monocle is, now, if you can meet a guy with a monocle, I mean, like, I'm all in.
What was his financial advice? He said buy Park Place?
Where is that?
Where is that? I can't find it.
Tune in to It's Only Money with Scott Brown from Edgewater Family Wealth, Sunday mornings at 7 on Real Radio 104.1. Raymond James Financial Services, Inc., member FINRA SIPC. Edgewater Family Wealth is not a broker-dealer, is independent of RJFS.